Good day, friends. Currently, we are in the series of videos trying to learn prompting for using AI in long-term investing. On the screen, whatever you see, tick mark are the completed use cases. Please check my previous videos. And presently, we are doing a series on the financial forensic analysis, the different models, and we are starting looking one by one each of the models, introducing you to the models followed by the prompting. In this present video, we will understand about Beneish M-Score, what that model stands for, and how to prompt to get insights from the AI tool. So, coming to the uh, list of different models, we have completed Piotrowski score and Lev Tyagarajan 12 signals, which is helped to evaluate the fundamental strength of a company, indirectly a stock selection. In this video, we are going to discuss about Beneish M score, which is to detect fraud and manipulation. So, the academic, I'll introduce every academic detail about the model before going to prompting. So, the Beneish M score, this was founded by Professor Beneish in 1999, and the purpose was to identify any manipulations. There are 8 components in this part of this analysis. Uh, day sales, gross margin index, asset quality index, sales growth index, depreciation index, SGAI index, leverage index, and total accrual to total assets. Each of the signals have a significance. It's not each of these variables have a significance. It's not something just a mathematical model. Like say example, gross margin index. So declining margins is gives a pressure to manipulate. Then the last one, total accruals to total assets. High accruals means it's aggressive accounting. So each of these components have a significance, and post calculating these 8 components, it is put in a formula which you see below. Minus 4.84 plus 0.92 into DSRA and so on. All these 8 components are put in this formula to arrive at the M score. Don't get baffled or afraid by seeing this formula. Everything the model will do. I'm just introducing you the basics about this model. And lastly comes the interpretation. If the value of this calculation is greater than minus 1.78, it's a likely earnings manipulator. It's a red flag. And lesser than 1.78, not likely earnings manipulation. So the prompt I have put something like this. Use the attached financial statement. Please calculate and interpret the Beneish M-score. Use the standard 8 variable model. I have listed the variables. Then present the output in comparative table with the following columns. Column 1 for 8 variables and the final M-score. Column 2 for calculation and value of the variables for present. The next column is for the previous year. And last column is inference about the variables for the present year. I'm not bothered about the previous year, only the present year. And finally, conclude with summary to explain whether the company is likely to be manipulating earnings based on the score, the formula plus calculation of the present year Beneish M-score, and the brief explanation of what each component indicates in this context. So I'm going to put this prompt and run it in cloud for carborundum universal. Okay. It is first extracting the different numbers which is needed for the calculation. After extracting the numbers, it is calculating these 8 variables. Whatever 8 variables we saw, it is showing with the calculation. I insist on calculation because it always helps us to validate whether the model is doing properly. Say I can pick up these numbers and go back to the financial statement and see whether these numbers are there in the financial statements. So it has calculated those 8 components, and the final score calculation comes up, and then comes the summary. So there are several positive indicators and variables in context. What is each of this number indicate? Say receivable collection has improved. Gross margin index have remained stable with slight improvement, showing operational efficiency. TAT, the total accruals to total assets, strong cash conversion with operating cash flows exceeding reported earnings. So each of those 8 components, you find the inference and explanation. And conclusion, the negative M-score combined with strong operational metrics suggests the company is not engaged in earnings manipulation and maintains transparent financial reporting practice. Mind you, friends, this is a probabilistic model. It can be probably correct, 90 to 95% correct, but it really cannot say 100% it's a fraud or 100% a clean sheet to the company. So where the value is 1.78 is a cutoff, here you have better value, 2.6, almost 2.26. So I can download this as a PDF to be included as part of investment thesis, which is a separate video altogether. We can see that later. Okay. Now I'm going to run this on a totally a different company, that is Gensol Engineering. Okay. So the same prompt I'll copy, put it here. Statement of Gensol Engineering. Please calculate. Let us see how the model inverse. So it is first picking up the values on financial statements, tabulating it. These are the values which are used in the subsequent calculations. Even the first value, if you see DSRI, that itself is showing it as a risk signal. Let me minimize it a bit so that I can see it properly. Then GMI, that is also a risk signal. Then SGI, sales growth index, that's also at high risk. Depreciation index, favorable. SGI, favorable. Leverage index, risk signal. And TATA, that's also risk signal. It shows the final calculation. Final calculation is minus 0.644, which is lesser than 1.78. So what does the summary says? What does the assessment says? The Beneish is significantly above the threshold of minus 2.2, indicating that Gensol Engineering has a high probability of earnings manipulation. The company shows several concerns: extremely high sales growth, deteriorating gross margins, receivables growing faster than sales, negative operating cash flows, and increasing leverage. And for each of these components, it explains saying that it's a red flag, positive, major red flag, and so on. Critical concerns: cash flow versus earning disconnect, rapid growth questions, how it can have 142% growth. Working capital issues. Conclusion: Gensol Engineering shows strong indicators of potential earnings manipulation. This value is very less. Okay, recommendation: further investigation into revenue recognition practices, customer consultation, related party transaction, and working capital management is warranted. Whether you want to investigate or not, as a retail investor, these are the results or output from the models must alert you or must give you a trigger to avoid these companies. So one more interesting point is each of these components have a cutoff. Like for example, the DSRI value should be 1.278, but this is more than 1.29. So this DSRI has a cutoff of 1.278. GMI has a cutoff of 1.041. Don't get baffled by these numbers. These are all probabilistic and the statistical models. Excuse me, statistical models. So you are bound to see such values or numbers. And one more important point is this is academic value which I showed you as 1.28, whereas the model says it's 2.2. Yes, there are differences. The model says it is minus 2.2. There are differences where the different school of thoughts, they have increased the barrier or the level of cutoff from 2.2 to 1.78 or vice versa. Both are agreeable. If it is more stringent, more better for you. So friends, we'll catch up in the next video with another financial forensic models. Bye till then.